It's very clear as India is growing, and our economy has doubled. We need more institutions providing credit, and that's where a large number of banks and a few large NBFCs, including ours, is playing that role. And if you're a large NBFC, there is additional supervision, as you said, from RBI. That actually provides a level of comfort to other lenders who are lending to you, to the larger market, to the regulator and to the government. And we see it actually in a very positive way, because it also creates a moat against other smaller players who may not be up to speed in complying with regulations proactively. But the more important thing it shows is that India needs many more players that are providing credit. Whether you're a bank or an NBFC is secondary. Those are just two different licenses and they have certain different obligations. But when you go to the customer and he needs a home loan or she needs a car loan or they need a loan for medical expenses.
Or a loan to invest in the markets.
Or maybe a loan once in a while to invest in the markets. And when things go extreme, the regulator needs to come in and balance that. But at the same time, the definition of a market is for it to be open. It will find its levels, just make sure there isn't high volatility at the top and at the bottom. But you can't over-regulate markets either.
Yeah, you can't. What is the greatest challenge for the industry at this phase? Because there's talk about financialization of savings, more depositors coming in. There's also deposit mobilization moving into the stock markets. When you see all of that, what do you think is the greatest challenge for the industry?
I would say two big challenges. One is to see steady demand growth, because if you see that, supply the industry can take care of. The second challenge is we have to all grow up into being stronger companies, much better processes in place, much better risk systems in place, because India is going to take off. I'm very confident that the next decade is ours. And we are at $2,700 per capita. We will double in the next 5 years. We will be 4 times in the next 10 years. And as we can see, and as you can see in the mutual fund market the last couple of years, the flows are all coming from Indian money, domestic capital.
Yeah.
So there is a large section of the population now that is saving a lot more than what they need for their house and car and children's education and health. And this is going into financial products. And an economy that starts moving a set of its assets into financial products, start seeing much more growth going there on, because there's a multiplier effect over there. Versus money going into property or gold or sitting in the bank account ends up stagnating.
Yeah.